Today we're talking about the current dilemma in most of my clients' lives, and that is, should you leave your 2% interest for a bigger home? So let's get into it. Hi, my name is Casey Gray. I'm a broker associate, a realtor, a mother, and I love all things Ukiah, but I especially love helping first-time sellers sell their first home or figure out a way to keep their first home and use it as a rental property and buy a bigger home, because that is the point of real estate. It isn't to buy something and live in it forever, which yes, that is a secure way of living, but what we all want to do is build our generational wealth. We want to have retirement money, we want to have equity, we want to be able to use that equity, and we want to be able to be happy in our houses, not squished and smushed and only happy with our payments. So let's talk about some different ways that you can go about buying a bigger home with also navigating not leaving your 2% interest that you have on your current home. Option number one is you can convert your current home into a rental. And so if you own your home and you can generate rental income from it, you can cover your mortgage, your taxes, and insurance. This is a great way to do that, especially if you can even break even. Some people even opt to keep the house even if it's costing them a couple $100s a month, just because over time that is going to build and they're going to have some great equity, and the tenants are mostly paying down the loan. So if you can do this, it's super important. The way you can find out if this is a possibility for you is talk to your lender, who I'm happy to refer you to a lender to help understand what your finances are and what they will need to be to purchase your next home if you're going to rent out your current home. And so on that subject, the second option is to use the equity of your current home. A home equity line of credit, you can do a cash out refinance, or you can do a bridge loan. A bridge loan would mean that you would eventually have to sell that current home, but you can use the money that's in that house towards collateral as a down, so it's less stress for you to navigate that buying and selling at the same time process. The third option, if you want to purchase a bigger home as a second residence, you can do so. A second home loan typically will require a larger down payment, so that's something you'll have to work towards saving up for. Or if it's in a desirable area, you can qualify it as a vacation property if it's not where you're currently going to live. And that's another thing that a lender can help you explore. The fourth option, if you want to be able to buy a bigger property but keep your payment low, is find a property that has an additional unit on it. What this can mean for you is you're house hacking, as the pros call it, and you're paying part of your mortgage with that rental income. And so that's something that you might have to consider with having kids, having an ADU, something that you want to do and can fit your lifestyle. Or is there like a family member, a mother, grandma, someone that might be interested in living with you and helping pay that? And we're seeing that a lot these days with families who have been able to downsize and upsize at the same time together because they can put their funds together and be able to do it that way. Or you can also use that ADU as a short-term rental property, and you can rent it out, for a couple days, a midterm rental property, and do it for, months at a time. So there's lots of options there. The fifth option is either owner financing, which if someone wants to get owner financing, you can ask for a low interest rate. Sometimes they'll give it to you, sometimes they won't. You can ask for a very long term, or you can ask for a short term. It really will depend on the seller's motivation as to why they would want to do seller financing and if they are in need of that equity for their next goals. And the seller either has to own the house outright or be able to pay off their mortgage with whatever your down payment is. So if you're hoping for owner permanent financing on a $900,000 house and they owe $500,000, you're going to also have to put $500,000 down so they can pay off their mortgage and then now have a mortgage to you free and clear. Like I mentioned before, you could do a joint venture with a family member or a friend to share the financial burden of the next property that you're going to purchase. And this is a very common thing, especially in today's age. You know, we're always talking about having a village. So if you can create your own with your family or your friends that you have a very good understanding and communication with, then it's a great option. Or you could do a portfolio loan, and this is something that more specific credit unions or smaller bankers will do for you, and that's just something that they keep in-house over time. And typically that could be a 5-1 ARM, and so in 5 years your current interest rate will change. It can be a lot of different things, but that's what we see most often, and you're probably going to have about 20% down, if not more, for a portfolio loan. So just another thing that you might need to save for. For the sixth option, we're going to focus on cash flow. So we obviously want to optimize your current home's value, and so we want to update it if necessary. We want to make improvements to increase the maximize your rental income. So small things that might make your property more desirable than the others that are on the market. And we want to increase your savings. So you're going to focus on putting money in the bank while this is happening, so then you can purchase something else and then you can go on all your Disneyland vacations. And then the third option in this category is to adjust your budget, both your mortgage, your insurance, your taxes, and your maintenance costs. It's super important that we understand what your budget is and what it will be and all of these different things, so that we can accurately put you in a house that you're going to be able to afford and enjoy paying that mortgage. You know, if you're going from 2% to 7%, it's going to hurt a little probably, but is it going to be worth it? And what price range is it going to be worth it at? So that's something that we have to consider and talk about, so we can figure out exactly what purchase price you're going to be looking in, what insurance quotes we're going to be trying to get, and all of those things that come with purchasing a home and using a realtor who really understands what your needs are. So I can only know these things if you tell them to me, and so that's another huge step of it. I need to know exactly what you're looking for so I can find exactly what you're looking for. And the seventh option in this category is to keep both properties, and that's definitely what we want to do. When it comes to buying and selling at the same time, it's a bit of a gray area. There's no right or wrong way. Everyone has their own recommendations, and as your realtor, I would love to be able to help you navigate those areas of real estate that aren't so black and white. And that's why I have a free guide to moving up or down, and it's called the Gray Guide, just named after me, Casey Gray. And this just talks about the different steps that you have to take to sell your home and buy a home, and what those different timelines look like, things you need to do to prep your home, things that you need to do to prep your finances, and how we might be able to achieve both of those things and also get you to where you want to be. So if you have any questions at all, most of the info is down in that Gray Guide. And then of course, I'm always available by phone at 707-391-7963. So you can reach out to me anytime. I am available by text or call or email, and I am always taking on new clients. So I really appreciate you watching this video till the end. If you have any questions about buying or selling, or even just where to get brunch in Ukiah, you can reach out to me, and I look forward to helping you. So thanks so much for watching, and we'll see you in the next video.